Hey, good afternoon, August 29th, 2024, deribit Live. As always, me and Richard, Shane and Richard, here ready to entertain and thrill. And speaking of thrillers, actually, we've got a thrilling show. And it was Michael Jackson was born on this day, so there you go. So we will be thrilling indeed. We've got some interesting things to talk about today. Let's wait for a few more people to roll into the room. We've got Core from Holland, Giandrea, Vladimir, Antoine. Hey, we got our worldwide crew on board today. Actually, got a little bit of market activity too. You know, it's a little bit of a pump up in the last 30 minutes or so. Not much, but maybe $1,000. But a lot of weakness yesterday.
It's a very welcome $1,000 as far as I'm concerned.
Yeah, I'd like it to get back up to around 62 around there. And
if we get a 62K expiry, then that's
perfect for you, isn't it?
Yeah, that's everything goes out worthless. Yeah.
Okay, who do I need to call to make that happen?
Well, yeah, maybe deribit could do a bit of pumping for us.
Yeah, it's about time. You know, they should really pitch in and help us out. Johannes, all right, we got lots of people coming on. Excellent, good stuff. As always, hey, we do a little Q&A at the end of the show. So if you have any questions, please put them into the Q&A section of the chat. And we'll just get underway here in another minute or so. I was going to do a poll today, but I decided not to. Yeah.
Do you have any famous birthdays?
Just Michael Jackson. That's why I said we'd have a thriller of a show.
That went right over my head.
Yeah. Okay. Yeah. No, he was like 1958. I think he was born, if I'm not mistaken. And my daughter's taking a real shine to Michael Jackson. She's 8, and she copies all his dance moves. So we'll be out like at the store, and she's doing moonwalks and stuff. She just thinks it's quite amazing. But
yeah, I
was never that impressed with him. I mean, he's an interesting character, and he had some big hits, and he was very famous. But he was also a pretty weird dude.
Yeah. But, well, I think showbiz and fame does drive you a bit nuts, right?
Yeah, I think he had a strange upbringing too, and a strange family, and all kinds of stuff. So,
I read a very good book called "Howling at the Moon," and it was by a guy who acted as an agent for all these guys, including Michael Jackson and also Simon. What's his name from Simon and Garfunkel? Paul Simon.
Oh, Paul Simon.
And he said they were all mad as hatters.
Yeah, it's got to affect you, especially if you start from a young age. Like, think of all the child Hollywood or stars that most of them turn out to be pretty damn strange.
Yeah.
It must be
It's probably because of all the child sacrifice that they witness.
All right. Okay. So questions already. All right. Let's just get started. Let me go to the slides, and I'll just talk about what we've got going on today. And this is going to be an episode, I think, maybe a little bit more geared towards some people who are maybe just beginning their options journey or have been trading for a little while but aren't quite familiar with a few things. So I hope it's going to be really, really useful for those people. So let me go ahead and bring this up. I mean, it's really small down here because I got a little thing. All right, what are we talking about today? We're talking about undoing rolls to quickly realize profit. And this is something that we do all the time. And, I never really thought about it, but I'm going to explain a couple of concepts here in a bit. But I guess a lot of people think about rolling or adjusting trades and options, and then that's it. They kind of walk away. But that's not the way we view them. And once I'm finished with this, then Richard will jump on and he'll show you exactly what we're doing. We touched on it last week, but now we'll get into the mechanics this week, and you can all see how it works. So here, let me bring up the little my little whiteboard here. Hopefully this works. Oh, it's funny. I don't see the whole thing. It cuts off a lot of my space. But here, let me just explain this. We got two timelines here. The top one, let's say this is the basically the underlying price of an asset. Let's say it's a stock or a cryptocurrency. It doesn't matter what it is. All options work the same. And these are different strike prices. So we've got the 45, the 50, the 55, 60, and the 70. If right now the current price of something is at $45, and we think, maybe it just came up here, maybe it's sitting there, maybe we think it's going down, whatever, and we sell. So we're going to say sell the 50 strike price, and let's strike call. Let's say we get $100 for it, right? That's premium. You put that in your pocket. You're happy. You just sold it. And let's say it expires at the end of the month. If it's the beginning of August, maybe it's a 30-day option, expires at the end of this month. You keep $100 if the price stays below $50. I mean, you could buy it back anytime if it devalues, but let's just say we're holding it to expiry for whatever reason. Great. You're all pretty damn happy. But some news comes out, something happens, and kaboom, the price explodes up to $60. So now this short call you had at 50 is now $10 intrinsically. That's the intrinsic value, 60 minus 50 underwater. Never mind any time value that's left in it, right? And it's really hurting. And let's just say now all of a sudden, the price of this option is now, like, let's say it's like $600 or something. It's like, holy crap, you're down basically $500. And what are you forced to do? Let's say it's getting towards the end of the month or whenever you decide to roll or adjust this trade. Well, what are we doing? Well, we're buying this back, right? We sold it. So now we got to buy the darn thing. Let me, just clear this out. Now we got to buy it back, right? And we have to pay $600, right? Now we received $100 when we sold it. So we're in the whole $500. And that sucks. What can we do? Well, we can go out to another expiry. In this case, I've got the December here. You can see December down here. And we need to find that $500, right? We need to find some value there. When we want to roll it out, typically we'd want to do it as a credit so we can make a little bit of money. And what are we doing when we're rolling? Well, we're just giving ourselves more time and sometimes space to be correct. So if at the time, let's say these $60 where the current price is, let's say the price is still currently at $60, these happen to be worth, let's say $650. Okay, great. We could sell those right now. It will make up the loss from the previous month. Let's think about this just for a moment. So what did we do? All we did was we took a loss, right? We closed the previous position and we opened a new position. So we took a loss and we opened a new position. So there's an expression in options trading, you can roll until you're right. So you keep rolling and the price goes up again and you roll it again and you roll it again. Well, you could do that forever as long as you don't run out of margin because nothing ever goes one direction forever. But of course, a lot of people get hammered by this. The margin requirements get, more challenging, and stuff can really go for a long time. Now, here's the problem: is we went from this is in August, right? I don't know if you can see August at the top. I don't see it, to December. So we had to go 4 freaking months in the future, right? So let's just say we decide to hold this. And now it's, December 15th. And the price went from 60 and it kind of retreated and it's back, it's at 53 or something. Well, great. We'll collect that entire premium. That entire $650 will go in our pocket and we'll be happy. But here's the problem is we had to wait 4 freaking months to do it. So what we do is we always look at a different way. Now, most people who come into option tradings will roll a position and then sit on their hands and wait and say, oh, damn it, I've got to wait 4 months now or 4 weeks or however long it is, depending on how far against you that first position went. If it was a huge move, geez, you got to look way in the future. I mean, maybe you're looking at December, maybe you're looking at March. I don't know, right? Who knows? It really depends on the situation. And you're sitting on your hands and waiting, and it kind of sucks. So we're always looking at this differently. So we say, okay, this happened. Shit happens, right? Moves happen, news comes out, things you could never anticipate. That's life. That's the market. No problem. And now we've got this short call here, right? Short call way out here in December at 60, where the current price is, let's just say. We view that is storing the value in the future. And if you know or remember, there's less gamma the further something away is in time. So it's not going to throw our margin around as wildly as the price kind of oscillates and does stuff. It's going to be a little bit more muted, which is helpful. But we just think, you know what? Okay, we're going to store that out in December, and we're going to wait for opportunities to bring it forward, right? So how are we going to do that? Okay, let's say the price is at 60 and it retreats and it comes, around 55, 54. We can say, all right, let's take this 60. We're going to buy it back and we'll close that position, right? And we're going to sell a new position at 55. We can do that. More often than not, though, we won't close the entire position. We'll just close a portion of the position and bring it forward. Now, why do we want to bring it forward? Well, as you know, the closer something is an option, a short option is to, any option is to expiry, the faster the theta decay, that time decay, right? So if this is $500, if I can bring, let's say $100 of this to here, and it expires worthlessly, well, I've just reduced this position here by 1/5. I've realized 1/5 of that value already without waiting 4 months. Maybe this is 2 weeks. I say, okay, that was great. Let's do it again. Okay, another 1/5. Let's do it again. 3/5. And then the market does, makes a move or goes back up towards 60. Hey, we've got a lot less risk sitting out here now if we've done that. So that's the theory, and I know this is maybe a little bit of a hokey whiteboard thing I got there.
Well,
but
we can show a little bit of practical example of that in our synth mining account. If you want to share.
Yeah, that's what I was thinking, is because we're actually doing this right now, but not short calls in this case. We're doing it with short puts. You'll see how we're doing that, and it's a wonderful thing. And one last thing I'll mention before we get started, Richard, is okay. Let's say you sell a call or an option, the price goes wildly against you. You weren't expecting it, so you store that value out 1 month, 2 months, 3 months, whatever it happens to be. You bring it forward, and it doesn't work. Oh crap! That's okay. We can put it back there. We can move it back and forth 100 times. It doesn't matter, right? Because we don't know what the market's going to do. But when conditions look favorable, we'll bring some forward. We can always move it back again. All right, that's all I wanted to say about that.
Yeah, so I don't know if you've been following this Miner account, guys. You'll remember that we had a bunch of in the money puts. It's like 68k that all get deep in the money, and so we decided to roll all those puts out to naked puts in December. This was about a month ago we did this, and you remember we had 3 positions at 0.1, and they were at 60, 59, and I think 58 or 57. I think was where they were, and we just simply preserved the value out there. And then a week ago, I think it was a week ago, maybe 2 weeks ago, we thought, okay, let's try and move some of that risk forward. So what we did was we rolled the 58k short put in December down to 54k short put, which was like a debit. We took a debit of, I don't know, 350 or 400 basis points, I think. And this is equivalent to selling some of the position, but of course, because the position is only 0.1, we couldn't sell some of it. We had to sell all of it. So we simulated selling some of it by rolling it down. But basically, we released some of that premium, or we took some of that premium out of this position, and then I think seem to remember we actually sold call spreads on the 30th of December, which of course and of course we had that blast up to 64k, didn't we, last week, which wrong-footed us, and then that caused us to have to roll some of those calls into strangles in the same week. And we thought that's fine, we'll get away with that. And then of course the market dumped again, and I'll get onto that. There's this mad August we've had, and so now actually the calls of that call spread are now all bought back. But there's one remaining position of the put from the strangle that we rolled into. So we actually, by trying to manage that short-dated position, we got ourselves into more trouble. But that's okay. If you look at this position is 400 basis points in the money, minus the cover. We could sort of, if we sold the cover and bought this back, 400 basis points, which we could immediately take out to December again and simply roll this back to 58k, and we would, or maybe a little higher, 59k, and we would restore the value back there. But actually, we're not going to need to, because I think what we're going to do here is probably roll this in the money put into a strangle, a 1 week or 2 week strangle, maybe even with a higher bias on the call side, because we've already got those puts. So we'll sell like 0.3 of calls and maybe 0.1 of puts, and we'll get that 400 basis points back. And then we'll manage that again. And eventually we'll get this position to finally get to zero value. And when this position gets back to zero value, and by this time we might be halfway through September, well, now we'll be ready to go and take another chunk out of this risk in December. So, and this time we'll take this, for example, this 54k put, we'll take it down to 46k, and we'll rip out another 400 basis points of value, and we'll put those shorter dated. So we'll gradually just work away at this position. And if we don't manage to get rid of all of this December position by the time December's coming around, that's fine. We can just roll December to March, or roll December to June next year. I mean, who cares, right? We're just storing premium here.
And someone might ask, they might say, well, why not roll all that December to 2 weeks? Well, that is a lot of value there. And in order to do that, we'd have to sell something grossly in the money.
Well, this 60k put here, which is pretty much out of the money now in terms of spot, is 0.1214. It's 121 basis points, right? It's 12% of. Is that right? No, it's 1,200 basis points. It's 12% of premium. So we'd have to be, if we'd rolled that to a week, we'd have to write a position that was going to give us a 12% return in a week. That's a humongous position. And we'd be asking for trouble.
You were definitely asking for trouble. And the other thing I'll mention too is when we have those December puts, let's say it's a 58,000 December put, and Richard's saying, well, we decide to close that and we open up a 54,000, for example. Of course, we'll get less money for doing it. We'll have a debit. Why are we doing that? Well, we're doing that because it improves the position in December. It puts us further out of the money, and whatever it costs us, that's what we're bringing forward and saying, okay, let's make that up and have that realized in the next, let's say, 2 weeks or whenever we decide to sell that option. I hope that makes sense.
And also, kind of, why bother doing this at all? Why not just take the loss and just keep on writing risk and mentally accumulate the money? Well, actually, there's a few benefits. Keeping this wall of puts here actually gives us a positive delta against which we can be quite aggressive writing calls. So it gives us more confidence to take premium writing calls. If we get a pump up and the skews start going positive and the vols go up in the shorter dates, we can pile in with a lot of premium and to take a lot of premium out and take a big chunk out of this in the confidence that we've still got all of this premium acting as one delta cover against those short calls, which is why I'm much happier to sell more calls than I am puts at the moment, because I'm already short puts in December. So I'm effectively, and this, when I'm at the money here, really, I should be happy to write, I don't know, 0.4 or 0.5 of a calls for a position, particularly if it's double covered, and in short dates, because I know that if it goes wrong, I can always roll it back out again. So it's we find this quite an effective technique of this sort of temporary store of value kind of idea, but particularly if it's all got a delta on one side.
Yeah. Hey, Richard. We're running low on time. I think you had something regarding the crazy moves we had in August, showing the extent of total moves, which was quite fascinating.
Yeah, here's a little Python script I wrote yesterday, and I've just modified it for today to pick up today's moves. I was intrigued to understand how far we've moved this month in August, and so and you can see here in terms of so between midnight on the 1st and 11 a.m. today. Initial spot started at 64,617 a month ago, and at 11 UTC today it was 59601. That's our mark. So that's a move of minus 7.76% over the month, which is it's not a massive move, right? But if you look at the actual travel, so what I did I took the difference of spot values every hour across the entire month, across the time series, and then added them all up as absolute values to try and get so I wanted to know the distance we've actually walked in terms of 1 hour jumps. We've actually walked 283% of a Bitcoin in terms of distance, right? It's astonishingly volatile, even though we haven't really moved very far. And the irony is that I've got systematic books that have been diligently hedging all month long. And had they just not hedged and done nothing, we'd have another load of money.
Fine, yeah.
But as a result, we've just broken even, right? Because we spent all our money hedging in the fear that it could. But you'd have had to have balls of steel, right, to sit on that size position when we've had moves from it started off at 64.6 this month, and then down to 57, 58.
40.
Sorry, 47. Yeah. Back up to 64, and then it's been
70,
mental.
Yeah. So while this isn't trading advice, the moral of the story is if something goes horribly wrong, just close your eyes and go on holiday and come back and.
Honestly, it is often that if you could do that for 6 months, just roll out 6 months and go on holiday and come back, you probably usually find it's fine.
Probably fine. That's right.
So I just wanted to say, if you guys have been trading this and you've been finding it hard, well, this is why, because you have just traded 2.8 Bitcoins per Bitcoin.
It's incredible. Yeah.
Now, the other thing is, of course, if you were able to accurately predict the direction of the movement each hour, you'd have made an astonishing amount of money, right?
Yeah. Johannes says, rolling for me is a sure thing to make the market move. Not in my favor. Yeah, I know what you mean.
Absolutely.
And in fact, we'll sometimes be chatting, Richard and I. Let's just say the price is going up. We've got short calls in trouble. Well, all we need to do is just sell some puts, and it'll guarantee the price will go down. It's like, how many do we have to sell to get the price to reverse? So
we joke, but actually, this is a real phenomenon. The market is really hunting you, and the reason that the market is hunting you is because you have these liquidation levels, which we find a really good tool, by the way. And these liquidation levels occur because people are buying and selling futures at certain levels. Why are they buying and selling futures at those levels? Because in many cases they're hedging options positions, and the options positions that you're selling on a weekly or monthly basis, or buying if you're a long player, will be at certain strikes, and those certain strikes will be dictated by where the market was when you, because you might be saying, I'll always do 30 delta, or I'll always do 20 delta, or whatever. So a week ago, the market would have told you where you're going to be. So the market knows where you are, and it also knows where all the hedges are that are against your positions, because they went in at the same time, right? So that liquidity builds up, and of course, the market gets dragged towards long or short liquidity. It seeks to liquidate these positions, and you have been part of the problem of putting those positions in the market, which is why the market will hunt your strikes, and you will feel fear at the same time as everybody else. You will roll your positions when everyone else is rolling positions, because you all feel fear at the same time. And as you're rolling your positions, the dealer brokers on the other side are going to unwind their positions and unwind their hedges, and so there's no longer the liquidity to hunt, and you have given the market what it wanted. So more often than not, the way to do it is to literally close your eyes and feel the fear and do it anyway. Just stay anyway.
Diamond hands.
Yeah, and that's in these ranging markets. They're quite thin markets, and still retail isn't really back, in my view, to the market. If it was, we'd see a lot more FOMO on the upside, right? We'd see much higher option premiums. And so you're trading against professionals, and professionals don't feel fear. So if you feel fear, you're going to lose. Simple as that.
It reminds me, there was a documentary I saw maybe on Netflix. It was 3 or 4 years ago about that freehand rock climber. He's the first guy to go up somewhere in Yosemite. I can't remember the name of the climb, and he just had no fear. When I watched the documentary, I had sweaty palms just watching it. It was crazy.
Alex Honnold, yeah, he's a hero of mine.
And they took him in to do some tests on scans on his brain. He doesn't register. He just thinks differently. He doesn't register fear. He doesn't have the same reactions as quote unquote normal people. And
his amygdala doesn't respond to fear symptoms. Doesn't give fear responses in the same inputs.
Amygdala, or whatever the hell you want to call it. Mine was a layman's version of whatever you're talking about.
I mean, he's astonishing. And this is why I keep saying that the best traders are psychopaths, because they don't understand emotions, right? And so
Right.
they don't feel the fear and joy that you feel when winning or losing.
Yeah. Got a few questions here. We're almost time up here. Question from Vladimir. It feels that it's possible to build a strategy, depends on premium that exists on deribit and very long futures. Because if you'll pay attention on the 5th of August, when the huge drop happened, premium dropped down heavily. And for example, at 14th of March, it was amazingly high.
Yes, it's called a basis trade, and there's a basis trade arbitrage you can engage in. And if as long as you can cover the spread and make enough basis arb for the period that you're holding the two opposing positions to cover the cost of getting into those positions, yes, you'll make money. There's probably a systematic trade to be done on deribit for that.
Yes, Paul, we will get to all the questions. And Joe, thank you. Yes, Alex Honnold, El Capitan was what I don't remember the name of the Netflix show, but it was fantastic. It was a great little documentary. Another question from Vladimir. So to hedge ourselves a little bit, we can sell covered calls or covered puts at such periods. Yes. Paul, in past calls, it was stated that for your synth miner account, your target is to earn 10 basis points a day. Is that per spread position or across the whole book portfolio? That's across the whole portfolio.
It is across the whole portfolio, but we were rather caning it because we were earning it per position, which is why we're in the position we're in.
Yeah. So we're in recovery mode. We're in the 12-step program to get that back. If per position, then with 3 put spreads and 1 call spread per expiry, you would aim for 40 basis points a day for that expiry. Yeah, so it's not per position.
We kind of were doing that, but yes, that's
we pushed it.
We pushed it, and you saw the results of that.
And the market dropped 30%. We
yeah, which is that's quite a hell of a move, right? And given that, we've done pretty well. I think by the end of the year, this book will be more than fully recovered. Touch wood.
Yeah, I mean, it went from 70K to 47 for crying out loud. Right? When we did that, we had short puts. So
you're right. That's amazing, right? Yeah. I can't think of another asset where we'd have stayed alive with that strategy.
Yeah. Another question from Paul. Conversely, if your book was 1 Bitcoin and not 0.1 Bitcoin, would your aim be 100 basis points a day?
No. The aim is to earn 10 bips per day per Bitcoin. So 10 basis points of net asset value per day, not 10 basis points of a Bitcoin per day, using 0.05 of a Bitcoin as collateral. That would be ambitious, to say the least.
Vladimir says, why not sell aggressive short-dated calls against rolled long-dated puts, eventually having a position of short strangle?
That's pretty much what we're doing.
We do.
And the reason that we're in the position we are in is because that we had a particularly aggressive move last week, which caused us to have to. It caused us to feel as if we had to roll some stuff around. We actually didn't have to in the end, but we did, and then we got caught on the whipsaw as ever because. But basically that's what we're doing. We're selling short-dated calls against long-dated put spreads.
Yeah.
Sorry, short-dated call spreads against long-dated puts.
Yep.
At the moment, but we are also taking steps to reduce the size of those puts because we don't want to be just short long-dated puts. That in itself carries some risk, which we take as we accept as a calculated risk. We want to get back to the point where we are flat and just back to the strategy, earning money.
I think that's it for the questions so far, and we're right at the bottom of the hour. I can't believe we finished on time today. If there's any last questions, go ahead, plug them in right now. Anything we want to touch on before we take off today, Richard? Is there anything?
I'd be keen to understand, keen to know what our viewers think about what the expiry price of Bitcoin will be tomorrow.
Yeah. And it's interesting to note, too, that the ETF's outflows 2 days in a row.
Oh, yeah.
So I think your prediction was we'd have inflows today.
I got caught off guard today. Let me share the screen again. Entire screen 2, share. There we go. So this is yesterday's flows. What I think is very interesting is that IBIT, what are they called? The evil masters of the universe.
BlackRock.
BlackRock, yeah. They never have outflows, never. It's almost as if they've like held a gun to their customers' heads and said, "You will not remove money, or we'll kill your family."
Are there conditions with their ETF? Maybe there's huge penalties or something, or I don't know. I mean,
I don't know, but I think also their sales channel is through CFAs and into things like allocations out of pension fund kind of holdings, and so I think they probably have a much more strategic and ordered way of accumulating flows into the book, which does mean, of course, that it's, for example, if they've got like a quarterly redemption period, that does mean that if there is a redemption on a quarter, there's going to be a mega redemption.
Could be big, yeah.
Bitcoin's going to go to the floor, but it looks like it's like a couple of days of risk off. And what was the news event this week that was? It was just cautiousness around the carry trade, wasn't it? It was like the week just started cautiously, I think, after last week's big events.
Yeah, well, we had the FOMC, the Jackson Hole thing, and then yesterday I thought maybe Nvidia would move the market a bit more, but it didn't do that much.
Yeah, and the Jackson Hole was more like a sell the news event, wasn't it? Really?
Yeah. The one thing I was wondering about is when's the next expected outflows from China, because that always pumps Bitcoin. I don't know when that is. If any of our viewers know when that is, that would be helpful.
Yeah. And then there's also the Hong Kong ETF, isn't there? They didn't have the biggest inflow into the Hong Kong ETFs recently. The ETFs.
I haven't even looked at the Hong Kong. I saw that they just opened up a Brazilian one the other day or something. So
I saw a news thing that they had $250 million into one of the Hong Kong ETFs. I don't know whether it was Ethereum or Bitcoin. But it's been, it's. I do wonder though whether these ETFs are used as counter trades to things like being long MicroStrategy or being short MicroStrategy, because it's kind of a basis trade in a way, isn't it? And so I think there's a lot of shenanigans around these things. But what's the one that gives me confidence that Bitcoin's going up and just continually up is the BlackRock one. They just hoover up Bitcoin.
Steady. Yeah, it really is. Yeah. And just as a reminder, if anybody wants to watch us trade, you can always join us at Rogue Trader Academy or on Patreon at Rogue Trader Academy. And we trade live every day, do a little live stream, a few different accounts. What else we got here? Yes, Vladimir, fear can be eliminated by being under leveraged. Yes, indeed. It's always better to be out wishing you're in than in wishing you're out.
Absolutely. But if you are in, my advice is, if you are in, you need to own it. You chose to be there, and you chose to be there for hopefully good reasons, not because you're just an idiot, right? And you need to believe in your conviction. So if you are short puts and you're on margin call, but you still believe the market is long, and you need to stay in the game, because if you quit, you're gonna die. You're going to crystallize your loss. So you just need to find a way to stay in the game. You need to, if you're short puts, you need to buy some puts for cover to help your margins, sell some calls against your puts to bring in some premium. Do anything you can to stay in the game, right? And even if you have to reduce positions, don't kill it all. Just reduce enough of the positions to stay in the game. And you'll see your P&L drop, and you'll see your margin in the red and everything. But if you are there because you believe it's right, you will find it much easier to say, actually, stay calm. I believe I'm right. I just do what I need to do to survive, and I will eventually win. When everyone else has lost, the last seller has sold, there's only buyers left, right? So it's and you've got to. It's very important to stay calm. And I used to get really stressed about it. I don't mind admitting. And I find it useful actually just to take time out and actually just not meditate in a way that I'm not a religious person, but just sit and center myself and go through my thoughts and say, what, I chose to be here, and I believe this is the macro trade. I'm being caught out in the short term, but and just 10 minutes of that, I come out feeling stronger, and I'm ready to face the market again.
Yeah, Richard retreats into his office, puts on this whale music, and burns some incense. And there we go.
Well, Michael Burry used to use heavy rock, didn't he, to relax when
I don't know.
When he was short. Well, according to the film Big Short, he.
Yeah, I just know when I was prop trading, me and all the guys, we used to listen to that System of a Down with that wake up, what else you supposed to make up every morning at 6 a.m.
I hate that song. My wife likes that song. I hate it.
I only listened to it in that context. I didn't know it from anywhere else. So hey, a couple. We got to run. So Paul predicts 60K at expiry tomorrow morning. Johannes 59,250. That's very precise, Johannes. I got a feeling you've got some inside track trying to disguise it. Vladimir, another good advice: you can short Bitcoin as long as you want. You'll never be liquidated on deribit, but long very carefully.
Well, if you own the underlying, then yes, it's essentially just long dollars with interest.
Yeah. All right. Hey, thanks everyone for joining us. Again, you can always catch us at Rogue Trader Academy if you want to hang out with us each weekday for our live stream. Other than that, join us next Thursday for Deribit Live, and let's see where the price is and if we can keep bringing some of this risk forward and realizing that value, and we'll update you on it next week. Catch you next week, everyone.
Okay, cheers.